money is designed to lose value. In part 1, we walked the whole history: gold, the gold standard, Bretton Woods, and the day in 1971 the dollar was cut loose from gold for good. The takeaway was brutal and simple. Every currency on Earth is now backed by nothing but a promise, and those promises get printed into weakness, year after year. $100 in 1971 buys you roughly 12 today. And then we hit a wall. Because almost every asset people run to for safety, real estate, stocks, even gold, can also have its supply increased. Build more houses, issue more shares, mine more gold. Every escape hatch leaks. So I left you with one question. Is there anything, anywhere, with a supply that absolutely cannot be increased? This is part 2. And here's the fix. You don't need to have seen part 1 to follow this. Here's all you need. The money in your pocket is built to slowly lose value, on purpose, and nearly everything you'd run to instead can be inflated too. Now, the one thing that can't, Bitcoin, and the entire point, the thing that makes it different from every form of money that came before, is one number: 21 million. That is the total number of Bitcoin that will ever exist. Ever. It's not a target. It's not a guideline. It's written into the code that every participant in the network runs and enforces. Let me be precise about why that matters, because this is the whole game. With gold, if the price goes up, miners dig harder and supply grows. With dollars, if a government wants more, a central bank creates them. In both cases, supply responds to demand or to political will. There's always a lever, and someone's always tempted to pull it. Bitcoin removes the lever. The issuance schedule is fixed in advance, all the way out to the year 2140. Roughly every 4 years, the rate at which new Bitcoin is created gets cut in half. That's the halving. We're already deep into it. Around 20 million coins, more than 95% of the total, are already mined. And today, each new block creates just 3.125. And no president, no central bank, no CEO, no founder can speed it up, slow it down, or raise the ceiling. To change it, you'd have to convince the overwhelming majority of a global, decentralized network to vote against their own scarcity. It has never happened, and the incentives are built, so it never will. This is why people call it a monetary protocol, not a company. There's no headquarters to lobby, no board to pressure, no printing button hidden in a back room. Just rules. The same rules for everyone. Enforced by math, not by trust. For the first time in human history, we have money where the supply is genuinely, provably fixed. Now, to feel the weight of 21 million, let me give you one thought experiment, and I want to be crystal clear before I do. This is not a price prediction. It is not a target. It is a scale illustration to help the number land. Nothing more. Gold is humanity's benchmark for hard money. All the gold ever mined is worth, by recent estimates, somewhere around $29 trillion. Now, just as a piece of arithmetic, imagine Bitcoin one day held a similar role to gold. 29 trillion divided by 21 million coins comes out to roughly $1.4 million per Bitcoin. Again, that is not me saying it will happen. It's a way to see the scale of what a truly fixed supply could represent. If the world treated it the way it's long treated gold, the math is just a flashlight. Where the world actually goes is unknown. So that's the design. Here's the part that's playing out in the real world right now. and I'm going to give it to you straight, including the parts the hype crowd skips. For years, Bitcoin was a fringe asset, and then the institutions arrived. The clearest signal came in January 2024 when US regulators approved the first spot Bitcoin ETFs. In plain terms, that let ordinary investors, pension funds, and financial advisors buy Bitcoin exposure through a normal brokerage account, the same way they buy a stock. The gatekeepers had finally built a front door, and the money came. Since launch, across all the US spot Bitcoin ETFs, cumulative net inflows are roughly $53.7 billion as of mid-June 2026, according to Farsight Investors. The standout is BlackRock's fund, IBIT. Its cumulative net inflow is around $62.1 billion. Notice something strange there. IBIT alone pulled in more than the entire category's net total. How? Because one of the old, expensive legacy funds, Grayscale's GBTC, bled out tens of billions of dollars in net outflows. The money didn't just arrive, it rotated out of the costly old vehicle into the cheap new ones. That's not hype, that's plumbing. To put IBIT's scale in perspective, as of mid-June 2026, it held assets of around $48.6 billion, representing roughly 797,000 Bitcoin. And yes, that asset figure is down from earlier in the year, mostly because Bitcoin's price fell over that stretch, not because the coins walked out the door. And here's a detail that stopped a lot of people cold. As of the middle of 2025, BlackRock's Bitcoin fund was generating more in annual fees than BlackRock's own S&P 500 fund, both around $187 million a year. The Bitcoin product, matching the flagship index fund of the largest asset manager on Earth, as of that date. Now here's where I keep my promise to give you the honest version, because if I stopped there, you'd think it was a straight lineup. It is not. In 2026, the flows turned choppy, genuinely net negative across long stretches. In May 2026, we saw a sustained multi-day outflow streak with several single days in the $600 to $700 million range. The year actually flirted with net outflow territory. Money flowed out, not just in. I'm telling you that on purpose, because this channel is about accuracy, not cheerleading. Adoption is real, but it is volatile. It is nonlinear. And anyone who tells you it only goes up is selling you something. The institutional story is genuine. It is also messy. Both things are true. Then there are the corporate treasuries, companies holding Bitcoin on their balance sheets instead of only cash. As of mid-June 2026, by one count, around 199 public companies hold roughly 1.26 million Bitcoin between them. The pioneer, by a mile, is the company formerly known as MicroStrategy, now simply called Strategy. It holds 846,842 Bitcoin. Sit with that. That's roughly 4% of every Bitcoin that will ever exist, held by one company on a cost basis near $64 billion, openly chasing a target of 1 million coins. And finally, the level almost no one predicted a few years ago. Sovereign nations. In early 2025, a US executive order established a strategic Bitcoin reserve. And I have to be exact here, because this gets misreported constantly. The US government holds roughly 328,000 Bitcoin, but every single one of those came from seizures and forfeitures, criminal cases. Not one coin was bought on the open market. The reserve is real, but right now it's a policy of holding what was seized, not actively buying. Legislation to actually acquire more like the Lummis Bitcoin Act and a newer bipartisan proposal to accumulate up to 1 million Bitcoin, is still pending in Congress. So read it as direction, not as completed action. A government signaling that Bitcoin is now a strategic asset, while the buying mandate is still just a bill. So let's bring it home. In part 1, we saw the disease. Money built to lose value in a global system where no one can opt out and where nearly every escape route can be inflated too. Bitcoin is the proposed cure, not a stock, not a get-rich scheme, a monetary protocol with a supply that is fixed, transparent, and beyond the reach of any government or company. 21 million. That's it. That's the whole pitch. Whether it ultimately succeeds is not for me to promise, and not for anyone to promise honestly. What I can tell you is what it is, and why, for the first time, we have money that nobody can print. $100 in 1971 is 12 today. Bitcoin was built so that can never happen to it. That's the case. Made straight, hype stripped out, the good and the messy. This is the channel for Bitcoin Explained Straight. Follow for more.